So I see on the Discord chat room, I see a big debate. Well, wasn't on the Discord chat room. It was actually on the eToro. It was actually on the eToro chat room. There was a big debate whether we should be shorting oil or whether we should be longing oil. So please remind me to go through that as well. You know, John. Okay, cool. So we'll get started. Anyone who is in the chat room, the members chat room. So we have two chat rooms. We have the free one where everyone has access to, and then we have the paid one. So in the paid one, I placed two trades. So anyone has taken those two trades, I'm going to run through those first. Okay. So first is the Aussie 200. Okay. So AUS 200. And at the minute, we're down 20 quid. So obviously, when I'm trading, I only ever risk 1% of my accounts. And what I'm trading with is 10K. Okay. So I'm only ever risking 100 quid per trade. And we can see here the logic behind it. So first and foremost, we have an overall trend going up. Now, I could probably extend that trend line down to here if I wanted. But again, it actually suits better there because I'm not chopping off the candlestick here. So we have, I'm going to get rid of all these lines here because they're not massively relevant. This is the only one that's relevant because this may come down to here and double bottom and then take off. But I'm still happy enough with the overall trends here. So what I've done is I found that this floor hit the floor, bounced up. It's come back, hit the floor there again, bounced up, and it's now touching the floor here. So I've got triggered in. I got triggered in here yesterday. I was up slightly yesterday or this morning, and now we've come down and I'm down slightly. So as long as these lows are higher, I don't mind. So there's the low, and it's got higher, and it's got higher. So as long as these lows continue to get higher, I'm pretty happy with this. It really makes a difference to me whether I'm in profit now, because if these lows continue getting higher, it will eventually crack on and continue going. So that's something that's a bit of good news on the likes of this. Yes, the highs have got higher. It's taken out that one as well. So also positive. Okay, so we're looking, this is still positive. Even though I'm in a little bit of red, it's still quite positive. So the idea is there's a stop loss and that is the entry. So that was a trade that I took. We have the overall trend going up. It's something that is happening there. So it's something that we're looking to trade. Now, is that something that you guys would have taken? Now, obviously, this is an indice. So we cannot take an indice as the underlying asset. You have to go and buy an ETF for the Aussie 200. Now, I couldn't even tell you what the ETF for the Aussie 200 is, but I'm pretty sure there is one. So you have to trade this as a CFD. So there's no way of me buying the underlying asset on this. So this is a CFD trade. So is this something that you guys would have taken? So entry there, stop loss here. Now, is this trade still valid? Yes, this trade is still valid. It's still there. The entry is below. So we can still place this entry here because the price is still below here. So this is still a valid trade to get in if you want to. But is this something you guys would trade? Or is it something that you would not trade? So yes or no in the chat group. Yes, I'm in. Yes, I'm in. Yes, I'm in. Yes, on leverage. Yes, I'm in. Perfect. Now, the thing with this is that if this is a loss, I lose 100 quid, which is 1% of my account. So again, it really makes a difference whether this loses or wins. And that's the idea. What platform is this on? This one's actually on eToro, but my other trade is on Naga. So John, which platform are you trading with, John? So this one is with eToro, but the other trade I'm going to go through is on Naga. So I'll go through that with you now in a second. So I took two trades on Sunday, and they were the two trades. Square Finance? Never heard of them. Never heard of them. Okay, cool. So the second trade what I took was the French 40. Okay, now this is the trade that I took. Okay, so there's a stop loss and there's the entry, but this is MT5 and all my analysis is on MT4. So I'm gonna minimize that and actually pull up MT4 where all the analysis is. It just makes it a little bit easier for me. Okay, so now one of the things that was about this trade is we have the overall trend going up. The French economy, the French stocks are pretty strong at the minute, and they are probably the strongest in Europe. So the idea is that we're jumping in on one of the strongest indices in Europe at the minute. If we compare it to, say, the German DAX, look, the German DAX has gone pretty flat over the last couple of months. There's still a trade on the German DAX, but there as well. But the overall momentum is pretty sideways. If we go to the stock 50, again, we have a pretty sideways movement and then it takes off. If we look at the UK 100, again, we have this pretty sidewaysness. Yes, there's still a trade there, the same as there was on the French. So that's why I went for the French. It just had a much better, cleaner trend. Okay. Now, one of the things with this is that it didn't have a horizontal level. It didn't have a trend line. It didn't have anything to say to me that this was the floor. Okay, so this trade did not meet my rules. And anyone who's using the chat group, I would have put it on it that I'm taking this trade, but it doesn't meet my rules because see this trend line. This trend line doesn't work. Look, I'm sort of making this fit this trade. The idea would be is this trend line should be somewhere around here. It should be up there somewhere where we're getting much more touches. So bounce, 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 and then it's broken a trend line. So this one doesn't fit. I'm making it fit the trade that I want. So unfortunately, this one doesn't meet my rule number 4, but I still took it. Now, the reason I took it is because we have the overall momentum, we have the overall trajectory. Now, a couple of things that happened here was price action. Now, price action is huge when trading. It's something that's really, really important when we're trading. Now, we've had 1, 2, 3, 4 selling bars. And we had this big old selling day here. And then we had this big long wick at the bottom. Now, then we had this inside bar. So see this one here? So this bar is higher than this one. And look at the high, it's lower than this one. And this is a huge indication that this is going to turn. This also is a low test bar. So a low test bar tells me that there's more buyers than sellers in this market at this moment. So what I've done is I put my stop loss below there and my entry here. So my entry is at this point, my stop loss is here. Now, is this trade valid? Absolutely, this is still a valid trade. Now, this high has gone higher and his low is still a little bit higher. But again, we can't read this bar till this bar is finished because this is a daily chart. So this bar is not finished yet. Okay, so this trade is still valid to take right now if you want it. But the overall momentum is up. We're trending. It has cyclicity. We do not have a floor, and that's the only thing that I'm a little bit worried about. And the reason I took it was because if we look at this, see the high? There's the record high. So that's the all-time high. And look, by the time it gets to here, it's a 2-to-1. So if it gets up to the all-time high, I have a 2.5-to-1 winner. So there's the 3-to-1 winner. So I've probably 2 3/4 or 2 1/4 winner by the time it hits this all-time high. So it's one of these ones that I took that I'm happy to take as a risk to reward, because the risk to reward here is pretty good on this particular one. Whereas if I go back to the likes of the Aussie 200, so if I look at this one, the Aussie 200, there's the entry and there's a stop loss. See the shaded area? That was that. And look, by the time we get to the high here, that's a 1-to-1. Okay, so the risk to reward. So I'm risking 100 quid here and I'm making 100 quid. if it gets to here. Okay, so that's a difference in the two trades, that I'm risking £100 here, but if it hits this high, I'm getting 220 quid. So the risk to reward was there for me, but it doesn't meet my rules 100%. So this is why I didn't massively shout about it and tell everything about it. I put it up on the Henry trades, so I put it up there, but again, it didn't massively meet my rules. So did anyone else take that? Did anyone else take that, or was that something I jumped in on my own? Yes. So yes, Shane, that is perfect. So when you're using leverage, you have to use an amount of money in your trading account that you're happy to lose, because if you don't use a stop loss, there is a chance that you can lose a huge amount of your money. Okay. Now, when I say huge amount of your money, with any broker that's regulated in the FCA or even SISEC, they have a 50% margin call. So, which means that if you do not put a stop loss and the trade continues to drop, you will get stopped out at 50% of your account. So, if you have 10 grand in your trading account and you place a trade and you've no stop loss on it, and it starts to go down, by law, they will stop you out at 5K. So if you have 10 grand in your accounts and it continues to drop, they will stop you out at 5K, because that is 50% of your capital, and they have to do that by law. Or you put more money into the trading accounts. But again, if you're stopped out by law, by that term, if you take the trade again at the very same points, it's theoretically the same trade. And if it goes down to 2,500, then you will be stopped out. Okay. So that's why I only ever risk 1% of my accounts, and my target is always 3%. So if I'm risking 100, I'm always looking for 300 quid profit. Okay. So has anyone got any questions on the likes of this or the likes of the Aussie 200? So while you're writing your questions there, I'll just go over to the German DAX, because the German DAX was something similar. And the reason I didn't take it is because of this sideways movement. We have a ceiling there once, twice, and then it come back down. And just the structure here wasn't as nice as the French. And that's why I didn't take the German DAX, and that's why I took the French over the German. And if we look at the momentum to the upside, look, it has to make a higher high for me to hit a 1-to-1 on this. And that is something that I like to do. I like to make sure that I have a 1-to-1 before it hits an all-time high. Because look at this. There's the high, comes back down, goes back up, hits the high, and then drops again. So that's a double top. So by the time it hits a double top, I at least want to have a 1-to-1 on this. So someone has a question. Can we do EDU, please? No idea what EDU is. Okay, I'll have a look. My opinion on this is keep your money in your back pocket. This is, if we go back here, this is the largest private educational company. Okay. So I'm going to give you a little bit of education. Keep your money in your pocket. Don't even think about jumping into this. Look, just drop like a stone. And it's dropped like a stone since February. So this is not similar to what's gone on with the likes of Alibaba, Baidu, all the likes of those. This has dropped before then. And I have no idea why. But again, if you're looking at it and going, well, Henry was up here at $20. It's now down here at 1.7. It's value for money. This is where you have to look into the finances of the company. You have to look at what the balance sheet is, what the debt is, so on and so forth, Mark, and make sure that you have done your due diligence there. But this is not something that I would be looking at all. So ADA. This has gone on from strength to strength. You have no idea how annoyed I am that I didn't get triggered in here or here. But again, my 100 quid would now be 200 quid. But it is what it is. You can't get into, you can't take everything. So how many people have taken this at the moment? So what price did you get this at? So what price did you get in at? January, February, March. So you got in somewhere about 1.1. $0.18. Okay, Alexander, we're 0.18. Alexander, good trade. Alex, 1.69. What are you doing getting in at 1.69? That is absolutely criminal to get in at 1.69. I get in at 1.5. Why did you get in at 1.5? Oh, 1.69 your average price. Okay, cool. Someone got in at 218. What's wrong with you people? Why are you getting in at 218? Is the French on eToro? Yes, yeah, the French is on eToro. Yes, Eduardo. $1.5. Well, look, I can understand 1.5 because it's a breakout of this level. It's a breakout of this level. I can understand 1.5, but anything above 1.5, you should not be in this trade. Now, if you bought it here, back here, and you've now taken profit, absolutely, you have learned your lesson. But why on earth is anyone buying it in this run here? We need a pullback. We need a phase two. We need a phase two. So it's FAR40. FRA40. Okay, there's a French 40. So guys, remember, we needed a pullback here. We didn't get it. Okay, we had a pullback there onto that level. So that could have been a place where you got in. All right, so you may have got in there. I would have been like, okay, cool, that makes sense. There's logic to your entry on this point. So entry there at 2, maybe 14. Stop loss there below it. Absolutely, if you're trading a CFD, but we need some sort of a pullback. Now, my thing is that pullback there strong enough? I would have liked to seen that pullback there, but again, it didn't. It's continued to run. Okay. So for me, no one should be getting in this. This has to pull back. This has to pull back. We have to have some sort of phase two on the likes of these before we are looking to trade these. Okay. There's no point in jumping in on this now. And then what happens if the market drops? You're left holding this for the next 6 months, next 2 years for it to get back to where it should be. Okay. So we never buy at record highs like this. We wait for the phase two. Now, if it comes back to this level, then potentially yes. If it comes back to this area, then potentially yes. But how strong is this level? Probably not very strong. Okay. This one is probably better. But we needed to come back. We need the structure. We should not be buying this on an upward trajectory like this. We need to have a pullback. Okay, it just stops you from being left holding the bag. How many times have you bought up here and all of a sudden it's dropped? How many people bought BTC up around anywhere over 50 grand? How many people bought it anywhere between here and there? Which means, just say May, June, July, August, September. So you're holding it for 5 months and you're still not break even. You're still not break even. The last entry anyone should have had is about 51,000. That's the last entry anyone should have had around there. Okay. If you took that there, I can understand it. It's made a lower low. and it's now dropped down. Okay, so it's now dropped down. But the idea is that once it comes down to these levels, we should be buying at these levels. So on the way down, and again with this one, if it pulls back to the 42, that's where we should be. That's where we should be buying it. That's where we should be looking to jump in. Does that make sense? Okay, so if a phase two comes back down to there, that's where we're looking to get in. That's where we should be looking to jump in. Now, I've no idea whether it'll come back that far or not, or whether it'll just continue running. But again, we always get a phase two. Look, we had one here. Phase two, come back, jump in, took off, phase two, come back, jump in, phase one, phase two, jump in, phase two, jump in, phase two, jump in, phase two, jump in. Okay, you would have had to hold that for a little while. Phase two, jump in, phase two, jump in. So the idea is we never buy in a phase one. You don't get caught holding the torch, because who knows what it's going to hit here. Okay, so you've seen here my entries on this. Okay, my entry was at 50.1. Okay, just above the previous pullback. Okay, that's where I jumped in. That was my last entry. Literally, more or less break even on this one. The other two are up. Why? Because I costed it in at different prices on the way down. So look, my entry was just above here. Look, just above here, above that last pullback. The phase two happened and jumped in once the phase two was about to finish. Okay, so that's the idea. We wait for this phase two and then we jump in. So don't be jumping in. Trading, if you continuously do that, you will be left holding the assets when everyone else is either taking profit or all of a sudden the market drops. Okay, so just be aware of that. I'm really disappointed in you guys, because a lot of you guys have done my course. A lot of you guys are on the webinars. A lot of you guys have all done education with us, whether it's myself or Ben. So don't forget the principles of trading. We're always going to have a phase two. It always happens. Always. How confident are you of shorting crypto instead of strong phase ones? Stuart, you're asking how confident am I of shorting crypto? The problem with shorting crypto is that you have to have a broker that offers leverage. Now I know Naga here offers leverage on the likes of crypto. I know that they do that. So you guys can actually jump in on that up to 20 leverage if you want. But again, it's something that you guys have to work out. You guys have to make sure that you know what you're doing. So, and that's the thing. So there's the link for Naga. Anyone who wants to get leverage on crypto, click on the global one, and Alex will be your account manager. So if you have any questions, just ask Alex. Once you log in, you will see him. Can we have a look at Ether? Absolutely. Just to give you a heads up, where I'm actually all set up is in one of the windows, and the sun is beaming through the window. I can barely see the screen, which is actually a good complaint, isn't it? Now, again, Ether is the same as Bitcoin. I needed to come back to this level. It has to come back into this area for me to be looking at this. Now, if it comes back to there, we'll make that a little bit thicker. So if it comes back to there and you buy it, okay, so just say it comes back to this level and you buy it, and then it continues going down. We can all understand the logic there. That all makes sense. But if it's going up like this and you buy it here, So just say you buy it here. So it goes up and then this happens. How annoyed are you that you've got in here? Look, we're in that phase one. We're in that phase one. There's no level here. You decided to buy. It's on the way up. You're going, lovely. It's on the way up. Now, this is very classic retail traders. Massively classic retail traders. Look, this is the phase one. They're like, oh, I'm not so sure. I'm not so sure. I'm not so sure. Then it goes, oh shit, look, it's gone. It's gone. I need to get in. I need to get in. It's pulled back and you're going, oh no, it's dropping. It's a good job I didn't get in. And then it takes off again. It starts making higher highs. And you're going, oh, I need to get in. I need to get in. And then the market drops. And it means then that you're held, you have it here. You've got it massively high. Okay, and that's very classic retail traders. So remember, there's always going to be a phase two. Now, whether the phase two stops there, or whether it stops there, or whether it stops along here, somewhere along there, I don't know. But what we're looking at is these key levels, these key areas where we expect some sort of rejection. We expect, are the whales looking to jump in here? Because a whale or anyone who is any type of a trader, they're not looking to get in here. They're looking to get in at the end of the phase two. So by the time it gets back to this high again, they're in profit. And that's the idea. So for me, it has to come back down to this level before I'm looking to trade it. But again, if anyone has this and they got it at this level here, well done. Absolute wicked trade. If you took that as a CFD there when we're talking about it, you're absolutely laughing. This was a great little trade that we talked about on one of the webinars here. Fear of missing out. But how many times has anyone said to you, Stefan, Stephanie or Stefan, I'm shocking with names, that you should never bring emotion into trading. That is one of the cardinal sins when trading. Anytime you bring emotion into trading, it is a recipe for disaster. Okay, recipe for disaster. Okay. Now, and that's the idea. Me with Dodge down 40%. Absolutely. Look, I'm down quite a lot as well. And I got in emotion. This is the last emotional trade I took was Dodge. Absolutely. The last emotional trade I took was Dodge. Let's have a look at it. What was the entry? Now, remember I said to you I risk 100 quid per trade. Okay, so remember I said I risk 100 quid per trade. Now, Elon Musk was massively pumping Dogecoin. I wish I dodged Dodge. And Elon Musk was massively pumping Dogecoin. So look at my investments here. So look, 500 quid in Dogecoin was literally because Elon was pumping it at 54. Just go back. And that's the problem with emotion. Yes, we all get caught up in it. We all get caught up. 54. So there, bought it up there. I actually bought it on this run. So see this phase two? I actually caught it a day late and I bought it there on this beginning of this phase one here. So I didn't buy it directly on the bottom of the phase two. I bought it in the beginning of the next phase one. So I thought that this was the beginning of the next phase one. Now, am I annoyed I bought that there? No, because we've had the phase two. We've had the retracements. Yes, I got into a little bit of hype, and I put in 4 times more than I should have. And then what I did is when I come back down to these levels here, I bought some more. Okay, I bought some more. So we have a look at it. One is up money, the other one is down, and that's the difference. So the idea is that this one I got left holding the bag. Why? Because of fear of missing out, because of hype. Yes, I still waited for the phase two, and I didn't quite get in there at 47, but it really makes no difference. 54, 47. There's very little difference between the two of them. But again, it's there. Okay. Shouldn't you put a stop loss? But I have the underlying asset. So the worst I can lose on all of this is £600. I can't lose any more than 600 quid. So then no, because this is the underlying asset. This is not a CFD. So it means I'm happy to hold on to this. If Dodge goes the whole way to zero, I lose 600 quid. So the idea is when I'm trading underlying assets, I don't put in a stop loss. When I'm trading CFDs, absolutely 100%. But again, I generally risk 1% of my accounts as I'm getting into positions. This is something that was hype. Elon was massively pushing. So look, I'm susceptible as well to the likes of this. It happens. We all happen. But again, I followed sort of my trading rules, waited for the phase 2, and then jumped in here on the beginning of the next phase 1. And I'm left holding in here. But again, I didn't jump in up here where a lot of people did at $73. I got in here. And what I did is then I scaled into my positions on the way down. Didn't get it here at 16, which I didn't see it. If I saw it, I would have bought it there again. But that's hindsight trading now again. All right. Someone asked for USD CAD. So probably easier go over here for USD CAD. So USD CAD. So this is USD CAD on, or sorry, bear with me, USD CAD on the daily chart. So I'm going to get rid of this. I'm going to get rid of some of these lines here. So trading FX is very different to trading stocks. Now see these lines here, all these lines are support and resistance. So look, bounce, bounce, bounce. So it hit its head there once, twice, 3 times. And I'm trying to predict, is it going to hit its head here and then bounce to the upside? Okay, so it's very, very different trading foreign exchange. Now, why is foreign exchange so different? Because look at this trend. It's absolutely shocking. Okay, it's absolutely shocking. Someone has said, have a look at the NASDAQ. So just let's have a look at the NAS, for instance, quickly. And I'm going to zoom out on the chart. Look at the difference. Look at the trend. Let's type in a stock Crocs, for instance. Look at the trend there. AHT. Look at the trend. NVIDIA. Look at the trend. Okay, they're very easy to predict. But when we look at the likes of foreign exchange, look, it goes up short term, big drops, short term, sideways, massive spike, massive drop. Okay, and it's all over the place. So the problem is that trying to work out where these areas are, where it's going to change on foreign exchange is much more difficult. So your analysis has to be much more on point. Okay. So it has to be much more on point. So one of the things is that I found this level here. So I hit its head once, hit its head twice, 3 times, 4 times, but then it broke through, and then we have today's bar. Now we cannot analyze this till today's bar is finished. Okay, so today's bar has to be finished for us to have a look at this. Now, if I get a trend line and I start here at the bottom, and put it underneath. So I have a bounce here. It doesn't come back to it. Touches here, bounce. Touches here, bounce. Okay, so we have conflicting evidence between these 2 levels. It's this horizontal here is telling me that I should bounce here, but the trend line is telling me it should come back down to here. All right. So if I have a look at this horizontal and see how strong it is. So bounce, 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 bounce. A bounce there, bounce, bounce, bounce. So it looks actually pretty decent. So in 1, 2, 3, 4, 5, 6, 7. So in the space of 4 months, 5 months, we've had 7 touches on that level. Okay, so it looks okay. It doesn't look too bad. Now, historically, we only have 1 rejection there. Well, there's 2 rejections there historically. So it's not historically, it's not a huge level, but most recently it's decent. So the question then lies, if this bar finishes like this tonight, so 10 o'clock tonight, this bar will finish. And then my question to you guys is, there's where the stop loss would be, and that's where the entry. Is this a trade that you would take to the upside? And remember I said the risk to reward, by the time it hits this high, we would have a 4.5 to 1. So is this something that you guys would look at? And I'll go through my analysis on this once you have given your answers. So yes or no? So some people say stop loss is a bit too high. Okay. So the general consensus across the board is yes, this is a trade. Okay, perfect. So that's the trade that you guys have here. All right. So I'm going to delete that there. Okay, so most of you guys are looking at, someone said it's on a Fibonacci sequence. No, it's on the 50% level. Yes, maybe the 50% level, or sorry, it's not. It's not on the Fibonacci sequence. It's between the 68 or 61.8 and the 786. So it's not actually on a Fibonacci sequence. Yeah, and John. So it's not on a Fibonacci. So now the analysis we've done, we have the level, we have this trend line, we have the cyclicity, we have the momentum going up, and we have a big old sell-off here. Okay, with a big old sell-off. So it's telling us that US dollar is stronger than CAD. Okay, it's telling us the US dollar is stronger than CAD. Okay, so does anyone know what drives Canadian dollar? Does anyone know what drives Canadian dollar? Okay, because remember, these are all linked. This is all massively linked. Okay, so most people are correct. Oil drives Canadian dollar. Okay, so US dollar. Does anyone know what drives US dollar? The biggest driver of US dollar? Anyone know what the biggest driver of US dollar is? Gold? No. Gold doesn't drive US dollar. Fed? Close to Fed. Oil doesn't drive US dollar. Interest? Okay, so the biggest driver of US dollar is jobs data. Is the jobs data that comes out the first Friday of every month. Now, if the jobs data is good and the US have less unemployed people, then that dollar is going to start getting stronger. Okay, so that's the beginning. That's the very first thing that drives it. Okay, so that is something that you need to make sure and have a look into. Has the jobs data been good? Is it expected to be good? Now, if we're getting into a trade here, the first Friday of every month, so we're probably 2 weeks away from that happening. Okay, so we're 2 weeks away from that happening. Will we be in and out of the trade by the time that happens? In 10 days, the market will probably sit sideways till the actual jobs data comes out. Okay, so make sure you understand that. So there are two big things you have to check before you take this. Now, the last thing that I am looking for in this is price action. Okay, so unfortunately, we don't really have price action on this at the minute, not the one that I'm looking for. Now, at the minute, anyone who's done my course, we have a ring low. Okay, so we have bar A and we have bar B. Now, what we're looking for is bar C, which is the confirmed ring low. Okay, so that's what we're looking for. We're looking for bar C. We're looking for that to come up like that. That's what we're looking for. But unfortunately, we don't have bar C. So our entry is there. So we get triggered in when the market starts to go up. So that's what we're looking for. So a ring low. Now, unfortunately, a ring low is not good enough here at the moment. It's not something that I'm wanting to do. So in this particular area, because I have two scenarios, I have A, which is the a horizontal, and I have B, which is the trend line, I need to have a clean price action. So the price action I'm looking for is this one. I'm looking for this, and I'm looking for this to finish above that horizontal level. I'm looking for that to finish above that horizontal level. So for me to take this, this has to finish there. The bar has to finish. So this has to come up. So at late at night, at 10 o'clock at the night, if this bar closes above that line, then I am interested in taking this. So price action. So what we're looking for is we're looking for a bar, something like this. And does anyone know what this bar is called? There's a couple of different names on it. Does anyone know what it's called? Someone said a hammer. That's what a hammer looks like, guys. Within reason. So do the two of them look the same? Mallet. Okay, so look, sometimes it's called a hammer, sometimes it's called a sword, spinning top. This is a bullish pin bar or a high test bar. Okay, so that's a high test bar or a bullish pin bar. So that's what we're looking for. Now, if this is red, okay, if this is red, what's it called? So if this is red, what's it called? So we have bullish pin bar or we have low test bar, either or. This is a low test, not a high test. That's a test at the bottom. So this is a low test and this is a bullish pin bar. So if it's red, it's still called a bullish pin bar. If it's green, it's still called a bullish pin bar. Okay, so color of this is irrelevant. Okay, what's relevant is this, the wick. So the sellers pushed the price down, the buyers had enough, and then they pushed it up. So that's the important thing there. Okay, and that's something that you have to go into. You have to go into this granular detail when we're looking to trade the foreign exchange market. Okay, when we're looking at the foreign exchange market, you have to go into this granular detail. Now, why? Because of the way the market moves. Because of the way the market moves. Now, if we are trading the likes of the stocks, do we need to go into this granular detail? No, not at all. Not at all. Why? Because look, the overall trend is up. We don't need to go into that much detail. We don't need to go into that. All we have to do is just wait for the pullback. Wait for the pullback and then buy. I wanted to come back to there. It didn't. Okay, get rid of that. Again, this pullback here, what do? We buy it. Okay, why? Because the trend. Yes, we may get stopped out for one or two of these trades, but if you continue buying at the end of the phase twos, you will make money. Okay, but when you're talking about the likes of the foreign exchange market, because the market is sideways, we have to go into this type of detail. Look, if that bar went up a fraction higher and it finished at 10 o'clock, then this will be of interest to me. But again, it's not something that I would take personally because I need the trend line and the horizontal line together. So this is not a trade I would be looking to take. And let's have a quick look at oil because oil is really important to this. Let's see how oil has reacted. And oil is buying at the moment. So oil is buying at the moment. So we have oil strengths at the moment, which means that we will have a little bit of CAD strength as well. Okay. So see, when we have oil weakness, we have CAD weakness. When we have oil strength, we have CAD strength. So the red and the green are only important so you understand the open and the close of the chart. That's all. Yes, that's all. Color is irrelevant. So there was a bit of a chat going on, whether before I'll just come back to oil now in a second, but something I do for every weekend. So every Friday, or sorry, every Sunday night, I actually go through a watch list here of what I should be trading. And we were looking at USD CAD. So USD CAD here says it's a buy. Okay, so it's on my list as a buy. And that's what we were doing on USD CAD. Now, if we look at the two of them here, so US dollar is +4, euro is -2, GBP is 0, -6, +1, +2, NZD is -1, and JPY is +3. So when we're looking at US dollar, so US dollar is the strongest currency here, and we're looking to trade CAD. So is USD CAD on the strength matrix, so on the strength and weakness, is that something we should be trading? Or are there better trades there to take against US dollar? Looking at this, so strength versus weakness. So USD versus CAD. Is that something we should be trading, or are there better options here? There actually are 4 better options here, aren't there? There are 4 better options. So we have USD, Aussie. That's a better trade. Look, +4 against -6. USD, Euro, or Euro USD. 4 -2. NZD USD. And GBP USD. They would be all better options to trade than CAD. Now, we can't guarantee that they are setting up right now. Can't guarantee they're setting up, but the idea is to trade strengths versus weakness. Okay. And now remember, this is last week's data. So this is last week's data. So this is a week old. Now we can never predict that it's going to do the same next week. Okay, we're never predict that it's going to do the same next week. But based on this, we have US dollar, which is the strongest, and Aussie, which is the weakness. So that's the one that we should be trading. Okay, Aussie USD. And look at the trend there, trending nicely. And we have now buying power here on Aussie. So Aussie's got strong over the last 2 days. So the idea would be is looking for a setup. Now, looking at the analysis there, so look, we placed a trade there on that short. Get rid of that one. So looking at this analysis here, is there anywhere we could actually be taking a trade? Can anyone tell me an area we would look to take a trade? Absolutely, at this horizontal level here. That to me is the area. I've just drawn in this trend line. It's not very good. Okay, I have a level there, I've bounced there and a bounce there, so it's not very good, but it's coming back in this area. This horizontal level for me is a much better level. So look, straight away from doing the analysis, I can see if it hits this 73,110 level, I am interested straight away. Now we'll just zoom out and have a look at this level, see what's there, see if there's any other bounces on this. So look, we can see that there's a couple of touches here. There's another bounce there, but nothing too strong here. It's all recent. It's all more recent. So for me, if that comes back up to there, that's where I'm interested in. So that for me would be a much better trade than the likes of USD CAD, but there could be a trade there. Euro USD. Again, we have another little trade here off that trend line. We have nice cyclicity, but this is not massively jumping out at me. It's not jumping out at me. But again, we have, look at the bounce retest. Bounce and retest there. Okay, on this particular one. GBP USD, this doesn't massively jump out at me. But again, look at our horizontal level. Bounce, bounce. And look at the price action bar. It's a really nice price action bar here again on this particular one. Stop loss, entry. The stop loss is behind the level. It's bounced there twice. So let's have a look. We have a couple of bounces here as well. So there is a rejection on that level. So there's 1, 2, 3. And I know for some people this is quite advanced. It's quite advanced stuff. But again, that's the idea of this. We're looking at these areas, and this is why jumping in on say the Sunday webinar is so important. If you're someone who follows the markets and someone who was interested in trading, whether it's foreign exchange, whether it's FX, whether it's stocks, you have to do a Sunday watch list. You have to make sure you're actually doing that education. You have to make sure that you've done that bit of work. You have to make sure you've done that bit of work on the weekend that sets you up for the week. And make sure that you have everything set up, and make sure that you have your week in front of you ready to start trading. So it doesn't take you hours and hours during the actual week to set up your trades, that you're not massively missing out. And that's one of the things that an awful lot of traders do, is they spend so much time trying to scan the markets, and then they come back tomorrow and they spend more time scanning the markets, and then the next day to scan the markets again. You should have done this on a Sunday night, whether it's stocks, whether it's FX. And then once that's done, that's when we should be looking to trade. And only what's on your list. Now, people then ask me, well, Henry, how do we scan the market for stocks? Well, scanning the market for stocks is actually quite easy. It's quite easy. It's one of the easiest things out there, because there's so many stock scanners out there. So for me, if you look at, say, TradingView, tradingview.com, for instance. Now, if I click on chart here, so tradingview.com, click on chart, we now have the chart set up. So okay, so this is TradingView, all set up here. So we have loads of stuff here on the left-hand side. I can add them. And then we have stuff that's ticked red. Okay, now look at US oil. So if I click on that there and I turn it red, it's now added to my red list. And if I click on this drop-down menu, I have all my red list here. So these are all the stuff that I'm looking at. These are all the things that are on my to-do list, on my watch list, all this sort of stuff here. And I will take them off the list if I think they're not good enough. But if you want to scan the market very, very quickly, so look at down here is stock screener. So have a look at that. Now you have stocks, you have FX, you have crypto. So we'll just go on to stocks. So just click on it here now, and then this opens up. We have a whole heap of stocks down here. Now, if we want to go to filter, click on filter here. Now, one of the things I like to do is take off the ones that are not of interest, and put on, just leave the NASDAQ. Don't need any of the rest of them, just leave the NASDAQ, and I'm happy with that. And then sector, if you want to go into a particular sector, okay, you can just pick out a particular sector and then go from there. Press the X, and we're looking for stuff that's trending. So you never have to sign up to this. This is free. You get one list here. You get all this. This is all free, so you don't have to pay for it. You can if you want. But what I will do is I'll make sure they're trending. So I'll quickly go through them, scan them. So here, Apple. Is Apple trending, yes or no? Is Apple hot or is Apple not? Based on this trend. Is this trending nicely? Yes or no, in your opinion? So we're going to go with the consensus. So 2 have said yes, 3 have said yes. 1 says sideways, 4 said yes, 5 said hot. Perfect. Okay, so look, this is now trending nicely. Perfect. Look at Microsoft. Is Microsoft trending nicely? Yes or no? So Microsoft here, look, I don't have a red tick beside Microsoft. So now Microsoft is now going onto my list. I've now ticked it. I've now added it to this list very quickly. Let's have a look at Google. Is Google trending? Yes or no? And all of a sudden, I'm getting a hot list here very quickly. Okay. Amazon. Is Amazon trending? Yes or no? Okay, so Amazon now comes off my list. Look here, taking it off. Amazon is off the list now. Perfect. Let's have a look at Facebook. That's not trending. Let's have a look at Facebook. Is Facebook trending? Facebook is on the list. Tesla. Is Tesla trending? Tesla's not. So look, Tesla comes off the list here. Get rid of it. Nvidia. Is that trending? Absolutely. That goes on the list. ASM.L. Is that trending? Yes, it is. It goes on my list. PayPal. Is that trending? Yes, it's trending, but it's nowhere near as nice as some of the other stuff. So PayPal, I'll leave it off the list there for the time being. Adobe, is that trending? Well, since March, yes, it is. So Adobe goes on the list and so on and so forth. And this is the idea, setting yourself up. So that means you have a whole list of stuff here now. And the problem with the likes of eToro is that you have to type it in here every single time to try find it. You have to try find it in here. You have to type it in here, or you have to go to trade markets. You then have to go to stocks. You then have to go to the exchange and look for the NASDAQ. And then you have to open a tab here, open a tab, go back to the original, open a second tab, go back to the original, and you have to have all these tabs open up along here to do that. Okay, so there's easier ways to do it. And one of the easier ways to do it is using trading views for your analysis. And that's something that's very simple and easy to do. Okay, now you can pick out finance. You can pick out loads of different sectors there very quickly and then go through them. And then you just minimize this. And this is all free. This is all free. Everything is here is free. You don't have to pay for any of this. And then you have all your list here of hot stuff that's right here. You want to trade. And if you want to go back to everything, you just go back to your watch list. And look, there's everything. So there's the stuff that's come off. Look, I took Tesla and Amazon off it. Okay. Now, if this is helpful, a lot of you guys have said this is helpful. Now, what I would say to you guys is anyone who's not in TraderStream, jump in on TraderStream. You have a 60-day or you have a 30-day free month. Click on it there. Click on the free month, and you have access to myself and Ben for a month for free. It is 60 quid. Okay, so it's 60 quid a month. So the first month is free. Hold on to it for 28 days if you are 29 days. And if you don't like it, cancel on the 30th day. If you want to keep it, and there's loads of stuff there. You get 4 webinars a week. Twice a month, you get a crypto webinar as well. Guys, there's loads of stuff. You get access to us on the stuff. You also get the Discord where we actually put up our trades and so on and so forth. If I pull this over here, anyone who hasn't seen it yet, it's here. So scroll down and look, here is my trades. There they are. Look, there's a trade before I placed it. There's the other trade before I placed it. Here's Ben's trades. Look, there's Ben's. He's after closing this one in a bit of profit. Look, 23% profit on this one. Okay, he's going through his analysis. He's also closed, it's gone up 50%, so on and so forth. That's hit his 50% gain as well. So look, there's loads of stuff there. I'm not saying to come in and follow our trades, but the idea is to come in and actually see what we're doing, jump in on board, learn some stuff, And look, it's been an absolute pleasure. Anyone who is interested, jump in on board there. I've put the link in there. Can you access this one on Trader Stream? No. Anyone who has got this, I will be putting this up on YouTube. So I will be posting my YouTube link in the notification area. So you can just pop on that and follow me on YouTube. I put up a lot of educational stuff on YouTube as well. So make sure you add me on YouTube. It's Henry Ward is my YouTube link. Here is it. So here are some of the videos that I put up as of late. So look there, jump in there. There's all my stuff. So I have done. Anyone who's interested, just jump in on board. Happy days, everyone. All right. Well, look, it's been a pleasure. Thank you very much. Hope you have a lovely evening. And did you complete the oil analysis? Sorry, I'll just go through oil here for you, because I know I was going to go through oil. Bear with me. I'm going to quickly look at oil. Bear with me before I finish up. So oil at the moment, we have this downward trend. So phase one, phase two, phase one, phase two, phase one, phase two, phase one, phase two. Now, if we look at this by putting in this horizontal level, we have one touch, two. I'll actually put in little arrows there so you guys can actually see it and make it nice and relevant for you guys. So on this level, so we're looking at this level here. All right. So we have a touch here. It rejects. That's one. We have a touch, two rejects. 3 bounces, 4 bounces, 5. Now it breaks through here. Then we have another rejection there. We have another rejection there. So now at this particular moment, we're right here. So what would you expect to happen here? Would you expect it to continue going up, or would you expect this to reverse and continue going down? What do you think? Now, the thing with trading is that we make decisions. Now, when we make decisions, we can be wrong. So for me, I would expect this to go down. The overall momentum here is going down. I would expect this to go down. Again, can't guarantee it, but I'd expect it to go down. So if I was looking to trade this particular one, I'd be looking at this. And again, I would like to see some sort of price action bar on this, but that's where we would be going. But you have to wait for this bar to finish. Okay. And if we're wrong, the chances of us getting triggered in here is very slim, because look where the price is. The price is up at nearly the top of this bar. So the chance of us getting triggered into the downside is quite slim if we're wrong, and we'll continue going up. But the ideal scenario there is a low test bar. Okay, so the ideal scenario, this one, or sorry, a high test bar is that one. That's the ideal bar we want to see there, that high test bar. And the idea why it's called a high test is because it hit the high, it hit the ceiling, it bounced off that area. So it went up, hit its head, and come back down. So high test. Okay, so that would be the idea. That's what we'd like to see. I'd like to see that finishing down there. And if that finishes down there, I'd be quietly confident that this will continue dropping. But if it finishes where it is now, I would expect maybe another bar up here and have potentially a doji. But at that point, we can't trade that because it's broken this level. So it's broken this level. So it's not something I would look to take. Okay. Okay, everyone. It's been an absolute pleasure. Thank you very much. Hope you have a lovely evening, and I will speak to you. I'll speak to you on Wednesday, guys. Okay. Bye-bye.